Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio in Times Square, New York City, we have Eyal Lifshitz, CEO of Bluevine, to discuss filling that gap from the big banks and providing those commercial services to small and medium-sized businesses. Eyal, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me.
And this week you're celebrating your 10th anniversary at Bluevine. Some impressive milestones: over 500,000 customers served, delivering $14 billion in loans, posting over $850 million in checking deposits. How is your company achieving these metrics by filling that gap from the big banks?
You point out a gap, which that gap 100% exists. Large banks underinvest in small business category. They invest more in corporate customers and consumers, which are larger profit pools for them, which ends up creating underserved segment with small businesses. You rarely hear a small business owner that says, "I love my large bank." And that is exactly the gap that we're looking to fill. We are looking to become the most loved small business banking platform in America. And the sort of principles that underscore our strategy are: one, to build products that are highly designed for small businesses, not transition them to consumer plus experience or not having access to the corporate products that they need. And then secondarily, providing as much access to the products and services that they need while creating value in that process. So, we've been doing this for 10 years right now, and finding a lot of that what we do resonates with our customers, and we're seeing tremendous growth.
Even though your vertical went through a recent reset period, there still is innovation right in the big banks and, of course, for fintechs as well. How is Bluevine differentiating among other fintech companies as well as the bigger banks?
It's interesting. There's a lot of articles and media around fintech serving SMB. The reality is that SMB is a wide category. SMB is defined as companies with less than 500 employees. And many of the investments and focus are companies that are serving mid-market small businesses or venture-backed companies. That is not the segment that we're serving. We are serving really what is Main Street America, less than $5 million in revenue small businesses, less than 20 employees. This is a segment that is highly underserved, and that's where we're focusing. And then even the fintechs that do cater to small businesses, many of them are point solutions versus broad platforms that are looking to cater and offer the wide width of services that we are offering. But the real competition is not really from fintech, it is from banks. Most small businesses are served by the traditional banking system. And there, as mentioned before, they're highly underserved. They're not getting access to the products and services they need. They're paying excessive fees on the services they're getting, which is mostly through basic account services. And anytime they need anything that is beyond basic banking, they look externally outside of their bank, which means they have a highly fragmented experience. That is all what we're trying to serve with a one-stop banking platform that answers all they need, have everything in one place, and really kind of allows them to focus on their business.
So why aren't more fintechs and banks doing what Bluevine does? And do you consider the entire small business sector your total addressable market?
Again, focusing on what we define as non-commercially banked, less than $5 million in revenue. These are served through retail banking at the branches, no-name support by the large banks. That is the category that we're serving. It's not the entire SMBs. It's what we define as Main Street America. The bakery, the restaurant, the plumber, the construction company, those are really our focus. And then why don't many do that? The short answer, it's really, really hard. It's hard to do that. It requires a combination of a strategy that goes wide. Offering the breadth of products that we offer is not easy. Checking, lending, payments, and more services all under one roof requires a lot of investment to make that experience all streamlined, all working together. And then in addition to that, it's also going deep. It's not enough to touch the surface level, the user experience. We built infrastructure. We build a full stack in order to be able of technology in order to provide this wide range of services. But we also go beyond that. We've built our own risk infrastructure. We've built our own data infrastructure. It's not enough to just touch this on the skin level. You really need to go deep in order to transform the entire experience. And that's what we've been doing for 10 years now. And there's a lot of capital that has gone into that, a lot of investment that has gone into that. And it's one of those things where something that's hard to do is definitely worthwhile, but certainly doesn't draw everybody into that problem.
Well, let's talk about that some more. What type of growth is Bluevine experiencing? And to your point, you put a lot of capital and investment into the different verticals that you're offering small businesses. Are you on a path to profitability?
We are tracking to generate $200 million in revenue this year, which is a major milestone for us. We've grown 80% from the previous year. We're definitely growing. We're not profitable yet, but we're certainly focusing on accretive growth, making sure that our unit economics are positive, that the payback on acquisition is strong. And so overall, right now, we have a lot of investment ahead of us because we believe that there is significant upside in delivering more and more services, more in value to our customers. Ultimately, profitability is part of the story here, and it's not too far away, but right now, I would say that there's more to do, and we are growing.
So what's next then? Are you going to raise more funds, or do you think Bluevine is on the IPO runway?
The goal, IPO, I get that question a lot, and the goal for us, an IPO is certainly a milestone, and it's important for us, it's important to our employees, and it's important to our investors. There's also a matter of adding credibility to our story with our customers and transparency, but it's a milestone, it's not the goal. The goal for us is to continue building Bluevine to a platform that serves as many customers across America as possible, really becoming that most loved small banking platform, and we truly believe we can build a generational company here.
All right, Eyal, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.